Right, record, right. So Euro now, right? It did a false break. The bears try to push price down. There's a zone at the bottom here, which was a previous support region. I marked it off before. You can see price came here, accumulated, and pushed up, right? So this area, you have to think like a, not so think like a retail trader, I think like an institutional trader. I think like how these guys just think. There's buy low and sell high, right? So this point here is where the buyers hanging out and liming or whatever, right? You see a rejection, you see it accumulated, and you see it shoot up, right? So this is a very important area here. Forget the top here. The top here could provide little bounces. But here is the main area we should be watching at if we get a major bounce. Right, so that out of the way. Right, you see these candles here? 1, 2, 3, 4. You see this like a, what kind of candle is this? This candle took out the momentum of this bigger candle here. It closed more than 50% of this candle. So the momentum of this daily candle was taken out. You all should know that. And if you see an engulfing candle and a candle closed more than 50% of that previous candle, that is momentum being taken out. Because usually at 50% of engulfing, there's a lot of orders being there now. Okay. Right. So to me, the euro is bullish. They are bulls in the market because it falls, breaks is low. So there were fake sellers here. People get caught. Stops were taken out, whatever you want to say, and market pushed up. So this is newfound support, right? So the support, it came, it tested, pushed down a little bit, then pushed up with this monster candle here. So the momentum is bullish, right? If you go on the forward chart, right. If you go on the forward chart now, right, you're seeing that I was explaining this to a fellow called Donnie. I don't know if you're wrong. That this was a consolidation range right here. And the engulfing got taken out again. The momentum of the engulfing candle got taken out with 3 candles in a row, like 3 white soldiers. So that is an indication that momentum is being taken out, right? To me, this is like one wave. This is like one move. Let me see. All right. Yeah, this is 2 waves, sorry. Because I have something called 2 candles rule. Right? You're looking at the high and looking at one candle before. And if the highs match up, right, high, right. This is a correction right here, right? So this is basically 2 waves here, 1, 2, right? The market can either react at this zone right here and come down, but that doesn't change my idea of the market going up. Because if you watch it on the bigger picture, right? Bigger picture, right? The market made 3 pushes down, right? The market made a push, pull back, a push, a pull back, a push. Then the market made 3 pushes, 1, 2, 3 pushes, right? So usually after a 3 push, this is a form of a developing bearish momentum. Momentum now developing. So usually after 3 pushes like this, the market is either do a 2-wave correction, a zigzag, or it could create a range, then bust down. Right? But right now currently it's approaching strong support and resistance, and it's approaching a trend line. Don't study the trend line so much, but study the actual zone where price stopped at and rejected. So this is a potential zone the market come down and retrace, and it could possibly come down to here to create an order base for it to go up higher to finish the correction of the bigger move. So if you watch the bigger move now, remember the market is at a correct, right? So if you spread on your Fibonacci from top to bottom, 88% is here. That is one zone you should pay attention to, and the 50% is here. You see where these lining up? These line up on supply zones. The market just fell, right? The 30 line up on here as well. Yeah, you can study 68, that is cool, but if the market reach there, but the market have 2 zones to take out first. But I'm more on the bearish side. Unless this high get taken out, all I know is all out bulls. But right now the market in a correction cycle. It has to correct this down move. Okay. How do you do this chatting, boy? Right, chat. So now you should be know when the market spikes. Market spikes. No, I don't trade news. I don't trade news. The wicks are footprints, right? You should pay attention to the wicks. Wicks is price points as well. There's footprints in the market, right? So you should pay attention to that. But the way how I looking at euro, I'm more looking at a retracement to make our next wave up, either to the 38 or to the 50. So you see how the bullish momentum taking out these 1, 2, 3, 4 candles, these four days of candles or 3 days of candles, it's a bullish momentum. So the sellers came out a little bit, they relinquished their positions, and are now coming in to start back a correction to this down move. So the market.
I'm listening to you. I know distracted you.
Why distracted? You distracting nobody? Right, so the euro, right, in a nutshell, you could wait for corrections to go higher, right? Corrections meaning retracements. Forget a trend line, right? You can wait for retracements. Something like here, so here's an nice zone. Yeah, here's a nice zone. The top of the Morningstar, right? You can wait for rejections here. A little base to form. Then you can expect a little shoot up to the 38 or to the 50. Right? Forget the 61 for now. It have these two important zones to take out. So you should watch for price bouncing from here or bouncing from the 50. Right? But really and truly is a bullish leg coming now. That's how I look at it. All right. Right. Let me take out this crap. Another pair to look at. Well, I'm not looking at pound pairs because is rubbish to me. To me, is rubbish because you can see the market coiling up. The market coiling. You see the market coiling up, and if you really study it, this is not big money. This rubbish here is not big money. Big money don't move so. This is speculation money, rumor money. So why you focus on Gobar and I have other pairs that moving nice and sweet. The euros, right? The Aussie dollars, those pairs moving good. I won't concentrate on the pound pairs. It's too much of rumors. Save all the money. All right? Forget pounds for the while. The 2 pound pairs I really like. Besides, I really like the pound Australian because I just focus a lot on this. This is a nice clean pair, right? But it's still a speculation within the market. So if you had a trade with less risk, then if you're doing a regular risk profile of whatever letters you have, cut it down to 20% or something. If you want to trade the pound pairs, but I'm not trading the pound pairs, right? I will trade in euros and little Aussie dollars and little 1 or 2 little yen pairs, like CAD yen or euro yen or something like that. Yeah, trade them, you know. All right. One to it. All right, good. All right, so no pound pairs for me. So the euros I'll be looking at, just looking nice. Euro USD. All right. Another one I like is the Euro NZD. This is a nice pair. It is give you a monster. It's give monster pips. You all hear me, right? What? I feel like I'm talking to myself. Oh, that's cool, man. All right. I like the Euro NZD. Chat. Now we're hearing. All right. Yes. All right. I like the Euro NZD. Keen went through stuff about zones and all that. I'll just show all this stuff like this is an important supportive region, but it has serious momentum coming down. So if you break this zone right here, this weekly zone, right, it have another 16500, which is a psychological number. Usually prices like to attract the psychological numbers and rest and so on. So we could, let me see what on the dating still going on. So all they do for those trade no pound pairs, save all their money, do something else, play some football or something. All right. So you see, this is a supportive region. So I thinking, because I see watching on the forward chart have a kind of trend termination pattern here. Usually when the pattern comes like this, it just bubbling around. I traded a little retracement up there, a little 70 pips or whatever I get. But this is the market in perform any turnarounds to correct the big long move. Turnarounds meaning higher highs, higher lows. The market still have a serious momentum down. The momentum is down. It have no if and but and I just had to wait on confirmation for me to put my money on the line. Although I just trade 0.01s, I just had to wait. I just had to make sure I just gotta make sure that I get confirmation turnarounds because the market coming down, the market should retrace, right? It should, because we don't know what the market could do, right? But an ideal situation for the market to retrace could be something like what the euro did. It come down, it make a low, it go up, it make a false break, it'll go up, probably a next false break, create a higher high, create a shift of momentum, buy retracements, go up, take it up. Something like that. That's a proper turnaround. You want me to repeat it? All right, the market going friggin' down, right? You want a turnaround. The better thing to do is wait for false breaks. It breaking this low. So if it break this low, it close above within 3 candles or 4 candles, right? We have a false break. We know the bears run out of steam. Let it go again. Let it false break here again. Let it create a structure base to work from. Once it create a structure base to work from, let it go up and create the bullish momentum. Let it create higher highs. Let it go up, let it create a higher high, right? Use your Fibonacci business, see if you get a retracement, wait for price to stall, right? Little dojis running, boom, take a little correction up. And this pair does get a lot of correction, a lot of pips. From here to here is around, I don't know, from this zone to this zone is 400 pips. Let's say we looking at here or here, 100 and something pips, right? So this is a pair to look at. I'll be posting little updates on it to see what's going on. Right, because right now I don't have enough structure for me to work from. If it break out of this trend terminating pattern, right, and it create higher highs like here, it could break out and it create a higher high, come back, right, I might be looking to buy here to go up to create a correctional pattern, put that trend line, boom, I want to sell. But the trade move up. Right? I'm talking too fast?
Nah, you're going good, you're going good.
Right, I find this is just how I just look at the market, right? Well, pound pairs out to the question, right? I like this one. It has moved slow like a Datsun, but it's nice. It's nice.
Yeah, the USC, yeah.
Yeah, it's nice because it gave you signs that how remember this down move needs to be corrected, right? The market is moving motives and correction. So this down move could be corrected, right? So if you take a Fibonacci from the top of the swing to the bottom of the swing, it have the 38, which is right here by these spikes. At the 50. So this zone could be our focal point, the 38, and the 50 could be our next focal point. So we could use this momentum coming up. Right now it's on a reaction zone right now, right? So if it bursts the zone, right, I'm going on the daily. I like the Aussie. The Aussie looking nice. You see it break out to the long-term trend line, right? I think it creates higher highs here, boy. Is this a higher high here? No, I think created yet. Don't check my indicator. Yeah, create high highs on the indicator. MACD created high highs. But I want this high to be taken out to create high highs here. All right, good. So we're waiting for this high to be taken out or this high to be taken out. If this high taken out and it close above, then we get back a retracement to this important zone here and we could take it up to the 38 or wherever, the 50. Right, so this is looking like a nice pair to look at for little small pips. This will get much pips.
And it's a beginner pair.
Yeah, you can use this in conjunction with the heavy pairs like the Pound Australians and the Pound New Zealands or whatever. You're looking at Euro Australian. I just trade more the heavy pairs. I don't really focus on this, but since this clean and clear and it is moved nice and smooth and in one direction, I wouldn't mind putting a position or two on it. A little 0.01 here and a 0.01 there. Just to feel nice though. All right. So it have about 200 something pips to the first zone here. It have a zone here. So this pair looking like a nice pair to trade. Another pair I'll be looking at is, let me see how the euro looking. No, this is rubbish. Let me see. No, this is rubbish. If you're watching here, is a consolation. This is serious rubbish. All I wait for the market to boost above or close below. This is rubbish to me. I won't trade that. That's not clear enough to me. This is not real money. This is not the smart money. This is not the big boys. This is a speculation, a set of shittongs inside here. So go trade Euro JPY. Euro Canadian. Euro Canadian. Euro Canadian in a triangular pattern within a falling wedge. Euro Canadian. So you see this. This is a falling wedge pattern, and you can see that it has it coiling up here, contracting on the daily chart. So I marked up the lows or the consolidation, the highs of the consolidation. So what I will be looking for is reactions from this point or reactions from this point. So if it react and give you like a bearish candlestick formation pattern, we could sell it down. So this is a kind of interesting pair. If it breaks above and holds, it have to break above at least 2 4-hour candles or 1 4-hour candle and hold and close above with a momentum. Then it could come back and it could rest here a little bit and we could take a buy and put the risk somewhere right here. It will be a few pips. So this could be a nice little right up to the zone. So that could be about 100 pips or something, so 75 pips, those small pips, right? That's pretty much it. I could be just focused on that. Let me see what UJ is saying. I don't like to trade UJ. The market could pull back from here, right? If you watch on the weekly chart, it's on a very important turning point area. Market came up and resisted many times. The daily chart, what the daily chart stating? Yeah, daily chart showing some bearish momentum, right? But you see how I feel in the market could burst your trend line and create a high higher than this, then start the fall. That's what I'm thinking. I think it has strength in the dollar still. And you see how these stocks recuperating from those falls, the end of October, right? So the equities kind of recuperating. So this could either burst here, retest, take down to the zone right here to the longer term trend line. So you could wait for a close beneath here, a little balance, let it form a resistance point. Bam, you can take it down to this trend line. This trend line is a bullish trend line, right? If it doesn't come down here, it could react from here. You gotta wait for structure to form. You can't just buy just so as the market falling. That don't make any sense to me. I just wait for structure to form, candlestick patterns, you know, go down to the lower time frame, scale long, drill long, look at the price, how price behaving, then I might take a buy. If price behaving good here, I might take a buy to this trend line, first TP. If it breaks and I get lucky and it goes up with the first prediction I made to make a higher than this, or something like here, so the market could eventually fall. Right? Because if you're watching it, it's making like a double top formation. Like this is our top, this is our neckline, this is our next top. And if all you're big on harmonics, this could be a harmonic I don't know what the hell is that, a shark fin or congaree, whatever you call it, but it could be a harmonic pattern as well. Right? If I'm talking too fast, if I'm confusing people, this is how IDAs operates. Right? I'll just show you another 1 or 2 opportunities. So Euro is a nice one. Right? I really like the Euro. Don't do no pound pairs because I not do no pound pairs. I not do no pound pairs. The Aussie dollar, the Euro, the Euro NZD. Those are 3 pairs I'll be looking at, and probably the Euro AUD. Because I seem like how the Aussie dollar gaining some strength, because this is moving inverse correlation. So if the Aussie dollar going up, we're gaining strength, the Euro NZD will be sort of bearish. So this have a kind of trend terminating pattern as well. It's going in a channel. So you all could, I like the data points in it. 1, 2, 3, 1, 2, 3. So this looking kind of all right to make a retracement from the bigger move. So I could be looking at the Euro, Aussie. I don't want to look at it, but I look at it. Euro Australian, Euro NZD, Euro CAD. I'll be looking at those pairs. I flag them, so I'll be looking at those. I'll be trading those. Do not trade the pound pairs. The pound pairs will be no hero and try to trade pound pairs. Because November 19th, which is tomorrow, it have a lot of shit going on with Brexit and whoever resigning and whatever. Now, just stay away from that. Wait till the market settle, give direction, then you could do it. Have many other instruments you could focus on where you can make money from. Don't put your money at risk where it don't have the big money playing. It have speculation money. It's like machines working. Essentially, the machines are working. Right? We don't want to deal with the machines. We want to deal with the proprietary institutional traders. Them trading pairs like this. I was looking at this. Actually looking at this. Just scrub on my screen, Jed. Anyway, I was actually looking at this NZD Canadian because I realized the NZD pairs getting strength now. And it's so nice this move is. Nobody never watched this. I just pull it up and I looking at it. Look how nice this blasted move is. What's that? Boom. 600 pips. Blood clots. Right. Right. What's that? Nobody watching these pairs. These pairs have the money moving. This is big money moving here. They take the money out of the pounds where everybody focusing on and they put in money here. They put in money in NZD, CHF. Look at the money. Look what the big money operating on. You gotta be like them. You gotta think like them. Understand? You can't just be running on pump because it's cool and it's a pound pair. It will take your freaking money. Right? Do something like this. Yeah, boy, Rocky, boy.
Yeah, okay.
I don't play with the churn, boy.
All right.
Right.
Well, I just want to close off with what I start with now, boy.
Yeah.
Why does you see the I want to share the book with the group.
Mm-hmm.
You know, the beginners and all is a good book to read because it teaching all the questions you have, you get the answer from that book.
Anybody see my screen still?
Yeah, we see the screen still.
How do I take it off?
Eh?
How do I take it off first?
Just stop share screen on top.
Which part about that? Oh yeah, stop share. Yeah.
Right. Yeah. Right. I'm going to share my own day.
Yeah, sure.
Right. Open that book, boy. I can lost the book, yes.
Yeah, I hope I wasn't too fast and what I say, boy.
Yeah.
I hope people understand what I say. I know. And thanks.
I was sending it in the Telegram group, right? So I sent the book in the Telegram group, right? Please all the time and go through the book. Beginners, go through it. Have all the questions all the need to ask, right? About trend lines, support resistance, all them different stuff. You'll get that in the book. You know, understanding different time frames, momentum, money management, and all risk management. It have that in the book also, right? I sent that link for Invictus FX's videos on YouTube. I know some of you all really can't continue paying for the IML education and them kind of thing. There's plenty free stuff out there, right? Yeah, this one real different. My whole trading game changed when I finished with that book and listened to that. I just put everything together and I started my shop be dance one time.
Yeah.
Right?
Hello.
So Invictus FX, I sent it in the group the other day. I'll send it back again with the book. And Wednesday, we have our next webinar. Right? Just like I follow up on the pairs again.
Yeah, so let me say something else. The pairs I'm going to be looking at is the euros.
Somebody mic in the background there.
Yeah, mute them now. Mute them now. I just want to say something.
Yeah.
You mute them? All right. So I'm going to be following the euros. I suggest you all do the same thing too. Because it's nice and smooth and the price action clean and it have money flow to a point in it. All right. So you want to be with the money flow. You want to trade clean, clear pairs. You want to have high probability setups. Right? I look at numerous pairs and I just breeze through them within a couple of minutes because I know what I'm looking for. Right? It happens over time. I bust my ass 13 hours a day, 8 hours a day, whatever. But right now I don't have to do that anymore. I just look at it for a few minutes and God's willing, I'll be able to develop that skill. Right? It just takes time. I am here. I'm not intimidating anybody. I just don't. When people doing shit, I don't like it. Right? So I just share some of my knowledge. So don't feel intimidated. Right? So I just putting that out there. I'm not out to frig up nobody because I could be wrong. It's not about knowing more than somebody or it's about making money. Right? The whole thing is about making money. It's about, I don't care how right he is. I don't care. I was talking to my mentor a couple of days ago. He was telling me, which one you rather be, a wrong rich trader or a right poor trader? I tell him I would rather be a wrong rich trader because you could be wrong sometimes, but is your risk reward. Remember, trading is mathematics. You're checking probability. So you want to be You want to have minimum risk, good rewards. So that is how I just look for trade setups, quality setups. So you all should do the same thing, analyze. You should spend more time analyzing, at least 2 to 3 hours a day, just charting, looking for stuff. Like for instance, me, I used to chart for hours and hours and hours and hours. I used to just fill out a pair and look for head and shoulders, wedges, triangles from present day straight back. Like that is a form of back testing for me now. So that is why I'm a big pattern trader as well. I'm a divergence trader. I'm like a Kalalua trader, a different breed of trader. So I have different skill sets. All right. So you all should just don't feel intimidated by Rockstar and Rockstar chatting and trying to help out. That's how Rockstar mentality is. Right? Right. So you take over now. And thanks for the time, guys.
Yeah, it's smooth, man. Well, we understand what we're about, right? Like we try and make some money in this thing now. Like make it easy, like make it simple.
Serious money, right? You all can put all your questions on the group. Don't feel shy to put the questions. Because James Arman, he's looking for people to learn the actual trading thing, and I'm here to help wherever I could. I'm a family man, a businessman, so whatever time I have, I'll render to you guys. Yeah, man. Thanks. Yeah, bro.
Yeah, Rockstar, thanks, eh?
Yeah, bro. Yeah, bro. No, see, now, brother. Yeah, man.
Yeah. Right, everybody. Well, I'm going to post the book, the link for the book, and the Invictus FX videos, and we'll take it in and
Yeah, man.
see what we could get inside. And Wednesday we go talk again.
Yeah,
Just chat and we go talk again,
yeah,
right?
that's just
Everything
follow up.
about everything.
That's just follow
Right, yeah.
up to whatever ideas we have, right? Cool. Later.
Yeah.
Thanks. Bye.
All right, everybody, have a good day.
Yeah, man.